Welcome back, and joining us on the show now is Vikram Dhawan. He's head commodities and fund manager at Nippon India Mutual Funds. Vikram, hi, thank you for joining in. And, with the way the gold prices are moving and the investment seems to be coming around, would you say that the narrative behind the whole gold story now seems to be changing?
Thank you very much for inviting me on your show, Manisha. Well, gold rallies in the past decades have had different flavors. I mean, if you look at the gold rally prior to COVID, it was very much driven by the ETF flows, the global ETF flows. During COVID, obviously, it became a hedge for anybody and anyone who could lay their hands on gold. The post-COVID narrative has been very, sort of stark by the domination of the flows by the central banks, where we saw some spike in central bank buying way back in 17-18, but I think it was punctuated by COVID. So I think every gold bull market is different in terms of the factors which are driving. Now, 2025 has started with a bang for gold. There, obviously, with everything being equal, we have seen, a very strong, investment demand for gold. Now, just to share with you that from the COVID peak of December 2020 till date, the gold ETF holdings globally are down by about 25-30%, roughly about. It was down by almost 1,000 tons middle of last year, but they're still down by about 800 tons. So they have been negative, flows as far as investments have been concerned. But they have picked up very significantly in 2025. Just to give you an idea, first couple of months we have seen close to about 100-150 tons of flows from global ETFs. So I think,
absolutely.
So I think the narrative would change. Obviously, at higher prices, we will see some scaling back of physical demand, but it remains to be seen how much of that physical demand will be picked up by central bank buying and investment demand. If you really ask me, I think investment demand is going to be the key in 2025 as far as the gold bull market is concerned.
Vikram, that exactly was my next question. So while we have seen retail jewelry demand continue to decline, and not just India, but in China and various other countries as well, when it comes to investment and keeping central banks aside, when you look at retail investment demand, do you think ETF is standing tall?
So I think Indian investors have benefiting from the virtues of gold ETF, the liquidity and being, very well regulated and being fully backed by physical gold. So I think and obviously the convenience and today everything is bought or sold on your handheld devices. So, ETFs tick all the boxes. But I think, yes, there is an element of, a question mark on where the physical demand will go in 2025. Still early days. I mean, we still have to see what happens during the season, especially in India, because India and China combined account for roughly about 50% of the global physical demand. But I think what we've also seen in China and India is that, a spurt in flows into ETF. Still, the flows are very, very incremental compared to the physical flows. For instance, in India, hardly 3 to 4% of the total flows come into, a gold ETF. But I think some slack will also be picked up by the flows into gold ETF. And just to give you a data set that if you look at the Indian mutual fund ecosystem, the gold AUM is roughly about 1% of the total mutual fund AUM. So we are nowhere close to that 5% what the wise people suggest to have in your portfolio.
Clearly. So how far are we, Vikram, when it comes to treating gold as an asset class which is mainstream?
So I think, obviously, if the US, the news emerging out of US turns pretty grim, especially for the so-called global South and Europe, etc., then I think you can see some tectonic shifts happening in the currency markets. And I think one of the reasons why flows have picked up recently in gold ETF is because there is some concern about currency volatility, which really accelerated, once the new, regime was, elected in the US. So I think if we see persistent, uncertainty in the currency markets, if we see, protracted volatility in the risk assets like equity, I'm not trying to say gold will become mainstream, but I think you will see the interest and the allocation to gold, going way beyond the historic high. Even today, also the global holdings, as per the reports by various agencies, global holdings today are somewhere around only 1% of the total portfolio value globally. Also, so despite the strong performance of gold, it is still under-owned asset class.
Wow.
All right, Vikram, thank you so much for sparing time and joining us today with your views on gold. All that is glittering is currently gold, with targets going up to almost $4,000. Manisha,
Yes,
thank you so much for joining in as well. We call time on this edition of Halftime Report. We leave you with the Nifty at the highest point of the day at 23,400. Business Lunch takes the action forward for the next 30 minutes.